You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 10th day of December 2024. Thanks for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. Michael's going to come on first today, as he has done the last few days. And then when he is finished giving us a recap of the live training room and doing a little trading on the TradingView platform, I will pick up where we normally start with our daily devotional. We're beginning a new topic today. Word of prayer, some news, the alerts. Obviously, Michael again can't hear me, so go ahead and take it away.
I'm here now. I can hear you now. Can you hear me okay?
Yeah, I can hear.
Okay. Yeah. Give me just 1 second, because I got the same problem that I had this morning and I'm trying to resolve it. Okay. I'm not trying to resolve it right now. I gotta log in on this other computer, so I have audio on one and visual on the other.
Wow.
So let me do that. Yeah, I'll get it fixed today. I'll get it fixed as soon as we're done. I'll get it fixed. I didn't have time during the break here. But the audio sounds good right now?
Yeah, audio's perfect.
Okay. And hang on, my video was starting up on the other computer. We're almost there. There we go. All right. So I can take it over here on the other computer. Hold it. Let me put my name in so I can tell which one is which. And all right, there we go. I will make this guy over here the visual, and that should be popping up for you anytime now. Over here on this, it says still waiting for next screen. There it is. Okay.
There it is. Okay, looks good.
All right, here we go. Here we go. All right, good afternoon, everyone. Today is Tuesday, the 10th day of December, 2024. Now, if you have not taken a free trial with us and you'd like to, then go here to mytradingiq.com and right here, click on the purple button. And wait for everything to catch up. There it is. Okay, so click on the purple button. Now, there's no credit card required for the trial. When you click on that, it is going to bring you to this registration page. Wow, there's such a delay. It's going to bring you to this registration page where all that we ask for is your name, your email, and your phone number. Down at the bottom, you can give us your machine ID if you have one. Only give us your machine ID if you're going to use NinjaTrader for charts, so you don't need to give it to us if you're just using it to trade. All right. Give us your TradingView login ID if you have one of those, and if you don't have one of those, you really should go out and get one. Okay, so that you'll be able to fully take advantage of the week-long trial that you're going to have. Right, get the indicators indicating on your desktop, the indicators that I'm going to be using in the room on your desktop. All right, so this morning we had a nice slow day, and we got good news today. DT Pro is not going away on Friday. For those of you guys who are in here right now who did not know that, and you used ET Pro, it is not going away on Friday, as they had said it was going to. We do get some sort of a reprieve. We don't know how long, but if it's like anything else that has to happen in a big business like StoneX, then I'd say it'd probably be a month or two anyway. But you still should get ready. Have the alternative ready. All right. That's what I've been working on for a couple months now. Anyway, the spreadsheet. If you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today we're up 60 ticks on the NQ, 13 ticks on gold, and that was it. All right. We only traded gold in the NQ today. We didn't trade the ES. We didn't trade the Russell. We didn't trade the YM. We didn't trade anything else using the normal stuff that we do in the morning session. All right. Today it took 13 minutes and 2 trades to get to $3,240. And we took a total of 4 trades this morning. So only 4 trades on the morning. Yesterday we only had 7. Today we only had 4. On the month now we're up $1,755 a contract. So we're averaging $250 with one contract each business day so far there on the month. On the year, we're at $113,822 with one contract. And so we're averaging $492 with one contract per business day so far this year. Following the 2420 blueprint, which says when you get a 100 in this column, when this column equals $100 per contract, you stop trading. And then if you were to add one contract per month, so far this year, you would have only had to work 69.31 hours and you would have averaged $3,098 per hour. Right, 69.31 hours and $3,098 per hour average. Okay. All right. Well, let's get into the trades that we took. Okay, the trades that we took, and that's the other trades as well. All right. So the trades that we took this morning. This was part of the lesson plan. The trades that we took on gold. The first one was right here. We picked up 3 ticks on the first trade, and then we picked up 10 ticks on the second trade. And that was all that we did with gold this morning. All right. This was part of the lesson plan. I'll get into that in a little while. There were more trades in here. Now you see I don't have anything on price other than the weekly trading zones. I don't have anything on price. You don't necessarily need to have anything on price, but we'll get into that soon. All right. The Russell, we didn't trade anything on the Russell today, but if we put the context on here, we'll go through the trades that did trigger. You can see when this is your whole day right here, this is your whole day. You can see the one screenshot. There was not a lot of opportunity, but doing what we normally do, you would have to come out of the overbought with the trend. So coming out of the overbought with the trend right here, that would have stopped you out. Coming out of the overbought right here, you wouldn't have had anything because the ribbon's all crunched up. Right here, you would have had one shorting opportunity down into the zone, could have gotten it back. Right here, let me get rid of the ultimate slingshot down there. Right here, you wouldn't have taken that going into the zone. Right here, you could have taken that, would have been just about a stop out to the tick, but it did move up afterward. Right here, that did put in a higher swing, so you could have taken this one right here for that move up, did not put in a higher swing, so you wouldn't trade again. And since then, this is from 11:30 to now. Nothing, just nothing. All right, now let me shut this off down here and we'll come back around to that in a few minutes. All right, on the ES, we didn't trade at all on the ES today either. And this is the whole day on the ES right here. So if you put the context on there, you will see that from the open right here at 9:30, this was not a trade because the ribbon was all crunched up. We really didn't have anything all through here until here at 10:25. This would have been a trade right here that would have stopped you out. Okay, then you couldn't take another trade until you got a higher swing in place. You could have taken one right here that would have gotten some of that back. Going in the other direction at 11 o'clock, there was a short right there you could have taken. And there was a short right here you could have taken. And then you get into the break and you're in the weekly trading zone right here. So you can't really do anything with that right there in the zone. You could have taken it, would have been a break even if I'd have done it. And then the next one would have been right here inside the zone. So you wouldn't have been able to do that either. Okay. So let me put that back and we'll look at the NQ today. The trades that we did take on the NQ. Now we use the NQ in the lesson plan as well, as you can see. And the trades we did take on the NQ, right here we got, we actually took 5 trades today. There's one that I didn't mark somewhere. The first one, we got 4 ticks. The second one, we got 4 more ticks to put us, oh, I'm sorry, we only got 2 trades. That's right. I thought there were 3 different numbers. But the first one, we got 48 ticks. That's where we got the goal for the day on this one. We got 48 ticks on that. And then the next one, we got 12 ticks. So we got 48 on that and 12 on that. If we put the context back up here, you can see, oops, let me do that. I want to turn it on. Oh, I shut everything off on the context. Let's turn this one on. Okay. All right. So in here, you would have just been looking for when price comes out of the oversold, and you can see all 4 lines in the ribbon. All right. That's what you've been looking for. We are on a 31 range. I don't know why I ended up taking those 2 trades in there because neither one of those came out of the oversold. But I must have been, I don't know what I was looking at the time. That is today, right? Yeah, it is. All right. Well, anyway, starting out the day here at 9:30. You had nothing in here because the ribbon was all crunched up. And then it finally gave you a little bit of a spread in the ribbon. And it pulled back. I think that this was probably over here. That was our first trade there. And then this was probably over here for our second trade. I've been playing around my charts quite a bit today, so that makes more sense. So this would have been our first trade. We got 48 ticks on that where it came out of the oversold. This would have been the second trade. We got 12 ticks on that where it came out of the oversold. Now that did not put in a higher swing. Turn back down. And so all through here, you would have been looking for price to pull back enough to get this into the overbought, the 2 trades range trigger into the overbought, and that never happened. Okay, that never happened. Okay, and then it changed directions, got into the oversold right here while the ribbon was spread out. So you could have taken a long right there, but we didn't. You could have done another one right. I was going right into the zone. You would have skipped that and didn't put in a higher swing. So you wouldn't have done that. And then it changed directions, and the only opportunity would have been right here was one. Then you would have had to wait for a lower swing. So you couldn't do that one. You couldn't do that one. You could finally do this one over here because the ribbon's still spread. You could have taken that. And then you had to wait for this way over here to take that. And then it didn't put in a lower swing, so you wouldn't be able to take that. And then you get into the break. And during the break, it tried to give you a long here, but it was right into the zone. So there's nothing you could do with that. And moved all the way over here. You could have taken a short there and a short here. This one would have given you a nice profit. This one would have stopped you out. Remember, we're trying to get the goal for the day. We're not trying to trade all day long. There was another one there, another one there. You could have taken both of those, would have been profitable. Right here, you couldn't have taken that because the ribbon's still too crunched up, but you could have taken this right here, which would have been profitable, or a break-even trade. All right, and that was the NQ. And that's trading as we know how to trade, as we've been trading for a while. And in some of these markets, there was just no opportunity at all. All right, trading like that, there was just no opportunity at all. Now this, I have this highlighted here on the Russell. I don't know why I have the blue arrow there. I don't think I took a trade this morning on the, oh, this is gold. Okay, I did take trades on gold. All right, so let's look at gold. Now, using all the stuff that I've been teaching over the last 2 weeks. Okay, now this isn't just stuff that I've only done for 2 weeks. It's just stuff that I've been showing you for 2 weeks. Okay, where all that you're looking for is separation between the blue line and the black line down here. It doesn't matter what's going on price. All right. All that you're looking for is a separation down here. This separation right here. Now, for all intents and purposes, we're just going to go with the blue line being the leading one and the trigger one. It's called the trigger. We'll just use it as the trigger. But instead of getting into a trade when you come out of the overbought or oversold, you would get into a trade when it goes into the overbought or oversold. Right? Instead of giving up that whole bar length of coming out of the overbought, coming out of the oversold, you get into the trade when it goes into the overbought or the oversold, and you use that whole bar length to get your goal for the day. Now, in this case, we're on a 9 range, but because we don't have to actually have the order on ahead of time, you could use this on a 10 range. So every bar is your goal for the day. Every single bar would give you your goal for the day on the 10 range. If you get 1 bar length, that is your goal for the day. Okay. So all you're looking for is separation between the trigger and the slingshot. And the trigger goes into either the overbought or oversold. When it goes into it, you buy the open or sell the open of the next bar. If it's overbought, you sell the open of the next bar. So like right here, you would sell the open of the next bar. Right here, you would buy the open of the next bar. Right here, sell the open of the next bar. You got to have separation between them. Right here, sell the open of the next bar. Right here, this one would have stopped you out. I'm pretty sure. Oops, it's going to go over one. Sell the open of the next bar. Again, you're only trying to get the goal for the day. Okay, buy the open. Buy the open. And this is almost a buy the open right here. Okay, you're only trying to get the goal for the day. So if you were to do that without even looking at price right here, if you were to do that, right here, you would sell the open of the next bar. Bang, goal for the day. Right here, you would buy the open of the next bar. Stop out. Right here, sell the open of the next bar. That, given 1 bar length, would be really close to stopping you out before it finally did go down. This one here, sell the open of the next bar. That would have gotten your stop to break even. This one right here, sell the open of the next bar. That would have stopped you out. This one right here, buy the open of the next bar. That would have gotten you to break even. This one right here, buy the open of the next bar. You would have gotten your goal for the day. So goal for the day, goal for the day. There's 2 stop outs and 2 break evens, I think, out of all this, right? Now, today hasn't been a great day for trading, but that's how it would have worked out here on gold. Using the stuff that we normally do, we had 2 trades that we took. We got 3 ticks and 10 ticks, and that worked out well. In here, right at the beginning of the market where we took those trades, we took one right here. I believe right here we took one where it came out of the oversold. And I think we took the other one over here where it came out of the oversold again. Or something like that. I don't know where the other arrow was, but it was something like that this morning. But that was gold. All right, so there was opportunity there on gold. And on the Russell, where we had like almost no opportunity, this is our whole day here on the Russell. And trading the way that we normally do, where you would have to wait for it to come out of the overbought or the oversold, and you with the trend, you have a higher swing or a lower swing. There was one trade right here. You would have sold the down close of this bar that would have stopped you out. And maybe sold right here. That you'd have gotten it back. Right? You wouldn't have bought there because you're going into a zone. You would have skipped that. You might have bought right here on this. No, this is a down close, so you would have skipped that altogether right there because it came out of the oversold on a down close. It's a little unusual, but it happens. So you would have had one trade in there, one stop out, and one decent trade. But if we throw this on here and we get rid of that, starting at the beginning, you had one right here. You would have sold the top of that bar. Got your goal for the day. You would have sold the top of that bar. Now, from the top of the bar, 87.4 was the top. This is a 19 range. You had to go 10 ticks in a profit, so down to 86.4 to get your stop to break even. And it went down to 86.4. So depending on your fill and all that, maybe stop to break even on that, maybe not. This one right here, you would have bought, well, this one right here, you would have bought the bottom, would have bought the open of this bar right here is what you would have bought, I think, right? And you would have bought the open of this bar. Okay, so that would have stopped you out. Go to the next one. You would have bought the open of this bar, would have gotten it back. Over here, you would have sold the open of that bar, stopped to break even. Over here, you would have sold the open of that bar, gotten your goal for the day. Over here, sold the open of that bar, goal for the day. Over here, bought the open of that bar, goal for the day. Do you guys see all that? What we're looking at is the separation between the blue and the black. All right, when you have that separation, you enter at the open of the next bar. If the blue is down here at the bottom, you're buying. If the blue is at the top, you're selling. Simple as that. You don't need to care about the trend. You don't need to care about where price is going or coming from. You don't need to know what the power swing high or low is. You just need to know what's happening down here and where the open of the bar is. Your stop loss is going to be about 1 bar length, maybe a little bit bigger than 1 bar length. Because usually when this happens, the bar that you get into is usually going to be a bar that's at a direction change, usually. Okay. You'll be entering on the actual bar of the direction change. It won't be entering on the bar after the direction change. You'll be entering at like the top of the bar at the direction change. Okay. That's what it's going to do most of the time. Now, the beauty of this is you can determine how big you want your bars to be. Like we have this on a 19 range, and that was to facilitate the math that you had to do to determine where your stop was going to have to be, or your buy stop limit was going to have to be. But you don't have to have it on a 19 range for this, because you don't have to put your order on ahead of time. You just put it on a nice even 20 range, and 20 ticks is 1 bar length, and that's the goal for the day. So if you do the same thing on a 20 tick, your bar length, your goal for the day. There's one there, and there's one here. 3 times right there in the last hour. But you could have gotten your goal for the day. 1 here, 2 more times. You could have gotten your goal for the day. Okay. You see what I mean? You don't have to have it on 19 range because you're not trying to facilitate the math. That was the reason why I had it all on multiples of 4 minus 1, or multiples of 10. You don't have to do that. You can put it on whatever your goal for the day is. Like let's say your goal for the day is $200. All right, so that would be 40 ticks on the Russell. So if you go to this on a 40 tick range, so your goal for the day is to make 40 ticks. I don't have a 40 range, but let's say I'll make one. I'm gonna add a custom interval, and we'll do a 40 range. So it doesn't matter. Oops, I didn't use it. It doesn't matter what it is. It's the same thing every time, right? So 1 bar length is your goal for the day. Bang. Right here, you'd be shorting right now. I'd short right there. Where this is the Russell. Where's my Russell time? Ah, crap, I just lost my Russell time. Hang on, let me bring it back up. So the spot to short was right here at 401.9. So I just shorted at 401.7. Okay. Now normally we would not be shorting right here, right? You wouldn't short right here normally, because this is what the context looks like. You know, the ribbon. You wouldn't normally short here. Right now, the short right here is going to be going back down to the BBC. It's failing to put in a higher swing right now. You would have gone long back here, and it went up some. But right now, it just gave the shorting indication right here by having this separation right here. What it's suggesting is that it's going to move down. It's going to fail. And now having all this information right here, you never would have taken this trade normally, right? You never would have normally taken that trade right there. Because we're in an uptrend, the ribbon is spread and going up. We're right on top of the weekly trading zone, so you're expecting the weekly trading zone is going to hold. And that's great if it does, because we're short. So if it goes down that far and gets into the weekly trading zone, I'm going to bump my stop to break even or lock in some profit. Okay. So to stop yourself from thinking or going back to the thinking that we've done in the past, and to just follow this pattern. Right here, you have the separation. This is overbought. What it suggests is that this bar, this 40 tick range bar, is going to close at the bottom. Okay. So if you can get in here at a position like right here at the open, and it does close at the bottom, the high of this bar right now is up at 404. So it'd be closing down at 98 is where it'd be closing at. Okay. If it does close down at 98, that would be right about here, right? And that's pretty close to what the weekly trading zone is at right now, I think. Right, if we put it all back on, that's actually below the weekly trading zone a little bit, but it's at the ribbon. So it'd be a trip back down to the ribbon right now is what you'd be anticipating on this. Okay. Now, if you just shut all that off and you just say, okay, well, this is the pattern that I'm going to follow, then like right here, you would have shorted right there, where normally you would probably want to short the down close right here. In this case right here, you would have gone, if I put this back on, you'd have had the bearish separation in here. You would have waited for the pullback and you would have waited for it to come out of the overbought. But using this pattern, you would have shorted right here at the top of that bar. Instead of waiting for it to give you the close at the bottom, you would have shorted right at the top. And by the time it triggers in this one, you would have already had your goal for the day times 2. Or if you had, if your goal for the day was $200, you would have had your goal for the day by the time it got down there to the bottom of the bar and trigger you into the rest of that move. Okay, so if you put all the pieces together, all the stuff that we've done in the past and all the stuff that we've taught over the years, what to expect out of leg lengths and all that stuff, you have a perfect opportunity here to lock in your goal for the day after 40 ticks and then just let it run and get multiples of your goal for the day because you're anticipating a leg length at least this big, right? So all the stuff that I've always said is still true. It's just now you have a better entry. Okay, that's what you expect out of it, right? And if you go over here, I know this is counter trend, but if you do the same thing over here, this is the leg length on the push down. And if it is going to fail here and it is going to change direction, then that's what you'd expect right there. You see that trade right now? This is the short that I put on and it's in profit right now. It hasn't got enough really to move my stop to break even yet. With a 40 tick range, I'd probably let it go. I don't know. Well, with a 30 tick range, I let it go 4 points. So I would probably let it do the same thing, the same 4 points. With a 31 range, I'd probably bump my stop to break even after 4, maybe 5 points with a 40 range. You can see it's in the money right now, and it's starting to move down. All right. So that's what that looks like. The Russell, where we didn't have any trades at all this morning, really any decent trades. We had one stop out and one good trade doing what we normally do, but we had multiple trades doing this. And that was multiple trades. It's multiple trades here on the 40 range. It wasn't just multiple trades on the smaller time frame, on the 19 range. It's multiple trades here on the 40 range. We got this one right here that's going right now. We had this one earlier right here that gave multiples. We had, going back, we had this one right at the open right here. That would have been perfect. Start out your day and you're done after 9 minutes. So that's how it would have worked with the Russell today, right? If you look at the ES, where we also didn't have hardly anything today, doing what we normally do. But if we get rid of the context and we throw the slingshot on here, and this right now is on a 7 range, but let's make it something that's something that's going to give us the goal for the day on a single trade. We'll make it an 8 range because that would give you the goal for the day on a single trade. We'll make it a 9 range. All right, just go to a 9 range because it doesn't really matter what the range is. All right, you're looking at the same thing. So today on a 9 range, there would have been a short right here. I mean, a long right here. That would have stopped you out. Right, so you would have started out with the stop out right there, and then there would not have been another trade until over here. Would have gotten it all back right there. And that Russell trade that I was telling you about, guys, that stop's going to break even now on that thing. Because this is from the target that I put on down here at plus 40 ticks. But the stop is going to break even. I'm actually going to lock in some profit on this. Right? Because this is a real trade that I'm doing right here. That was the Russell right here. Where should it go? At a minimum, it should go down here to the ribbon, but this is the leg length on the way down. We're into the weekly trading zone right now, and I have some profit locked in. If I get rid of the target that I drew down there, that I put down there, then, so we have some profit locked into this right now. From 7, we have 10 ticks profit locked into it. All right, it's at plus 20 right now. That's the goal for the day right there. That plus 20 is the goal for the day. And that's halfway through the bar. That's halfway down the current bar on the 40 range. Okay, go back here to the ES. So there was a shorting opportunity right here. That was really nice. There was a long right here, guys. This right here, long at the bottom of this bar, where you never would have been thinking to go long because you're in a trend right here that's going down. You never would have been thinking to go long. Right here, if you bought the open of this bar at 64.75, it ran up to 67.25. That's That's it's what, 2.5 points. And your goal for the day is 2 points. Right? There was just an opportunity here a minute ago to actually sell this bar right here, it looks like, because you had this separation. There's actually this bar right here that you would have sold. You would have sold right there at the open of that bar at 64.25, and it ran down to 62.50. So just about the goal for the day on that trade. Right? Do you see it? Not every trade is going to be a winner. Right? And what I was saying this morning is when you get things like this, where it tends to go sideways, gets into the overbought and goes sideways, they tend to happen in groups. Usually you're going to get a pullback that's just going to be a poke into the overbought or a poke into the oversold. And then it's going to do what you want it to do. Right? So I've been trying to find a way to take advantage of that so you can get the whole value of the bar that you're waiting for. Right? We just got out of that trade with 10 ticks profit. But you can get the whole value of that bar that you've been waiting for without having to wait for the down close. We've always been doing this. Sorry, I've gone over a little bit here, but we've always been doing this, right? Price goes like this, up, down, up, down, up, down, like that. And we've been selling on the pullback, and selling on the pullback, and selling on the pullback, right? And then we do that until the pullback doesn't continue the trend, and then we don't sell on the pullback anymore. But a lot of times what this is going to do is going to get you in the trade right here so you can take advantage of the pullback and then sell on the pullback. And then get in right here and take advantage of the pullback and then sell on the pullback. And that's what it just did with the Russell here a second ago. Right? Did you guys notice that? That Russell trade that we just took. That's exactly what it did. Right? We never normally would have gone short right here on this candle. Let me just move this out of the way. We never would have normally gone short on that candle. Right? But what we did is we sold the pullback down to the ribbon. Why? Because we have a pattern that repeats itself again and again and again. And if you can get your goal for the day in one move like that, you don't need to trade over and over again. Just get in there, get your goal for the day, and be done. Okay? All right. So if you have not taken a free trial with us, go here to mytradingiq.com, click on the purple button right here. There's no credit card required for the trial. Do all that. Then it's going to bring you to this registration page. Just fill out the form. All right, it's pretty simple stuff. Fill out the form down at the bottom if you have a NinjaTrader and you want to use Ninja charts. Give us your machine ID. If you have TradingView, give us your TradingView login ID. Now we have all the indicators on TradingView. We do not have all the indicators on Ninja. But if you have a Ninja account and you want to trade at your Ninja brokerage account, then that is fine. All right, and that's it. With that, I can pass it back out to fabulous Phoenix, Arizona in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready. And he is.
Alrighty, recap of the morning session.
Okay, so today it took 13 minutes and 2 trades to get to $3,240.
Good job.
Thank you. Thank you.
All right, guys, we're going to dive right into our daily devotional. And we're beginning a new topic today. We'll be in it for 5 days. From humbug to hallelujah. A 5-day Christmas transformation. Our scripture is Philippians 2, 1 through 11. I'm going to share it with you from the Message translation. If you've gotten anything at all out of following Christ, if His love has made any difference in your life, if being in a community of the Spirit means anything to you, if you have a heart, if you care, then do me a favor. Agree with each other, love each other, be deep-spirited friends. Don't push your way to the front, don't sweet talk your way to the top. Put yourself aside and help others get ahead. Don't be obsessed with getting your own advantage. Forget yourselves long enough to lend a helping hand. Verse 5, think of yourselves the way Christ Jesus thought of himself. He had equal status with God, but didn't think so much of himself that he had to cling to the advantages of that status no matter what. Not at all. When the time came, he set aside the privileges of deity and took on the status of a slave. Became human. Having become human, he stayed human. It was an incredibly humbling process. He didn't claim special privileges. Instead, he lived a selfless, obedient life and then died a selfless, obedient death, and the worst kind of death at that, a crucifixion. Because of that obedience, God lifted him high and honored him far beyond anyone or anything ever, so that all created beings in heaven and on earth, even those long ago dead and buried, will bow and worship before this Jesus Christ and call out in praise that he is the master of all, to the glorious honor of God the Father. Now we all know where humbug comes from. Ebenezer Scrooge. Today we're going to talk about being greedy with time. Now, Scrooge was the ultimate miser. We all know him as the embodiment of bah humbug. And everything Christmas isn't. But even if you know a Christmas carol like the lyrics to Silent Night, there are still powerful lessons hidden in Scrooge's story that we can apply to our own lives. As we revisit this beloved tale with its familiar cast of characters, both friend and foe, like the warm-hearted Bob Cratchit and gentle Tiny Tim, there's something fresh we can learn about ourselves through Scrooge's journey. While we might recognize Scrooge's insatiable love for money, there's another treasure he hoards that might hit closer to home for us today: his time. Now, you might think I'm not stingy with my time. My December calendar is packed with things I'm doing for others. And yet it's precisely because it's so full that it becomes precious and sometimes closely guarded. Sure, we're busy with festive gatherings, church events, gift giving, but in all our busyness, we might be overlooking the people who need us most. The family members, friends, and even strangers right in front of us. How often do we let the holiday rush sideline a call to a grandparent, half listen to a loved one, or pass by those in need in our communities? Just like Scrooge, we can be reluctant to let go of any time that might derail our own plans. But the Bible calls us to something deeper. Paul tells his friends in Philippians 2:3 and 4, don't be selfish. Don't try to impress others. Don't look out only for your own interest, but take an interest in others too. And Jesus himself reminds us to be on guard against greed. In Luke 12:15, he tells us that life is not defined by how much we possess or how tightly we cling to our own agenda. This Christmas, God invites us to release our grip on time and turn outward, embracing a life of true generosity. Let's examine where we've been holding back and instead choose to put others first. So, here's some things for you to think about. In what areas do you struggle with generosity? How can you be more open-handed with your time this season? Not your money, but your time. What can you let go of in your schedule to embrace a spirit of giving? Let's pray. Heavenly Father, we come before you with hearts filled with gratitude for the example of humility and love given to us through your Son, Jesus Christ, as reflected in Philippians 2. Help us to be united in spirit and purpose, considering others above ourselves and reflecting Christ's humility in all we do. May our actions and attitudes glorify you as we seek to serve others with love, compassion, and selflessness. Let every word and deed exalt the name of Jesus, who humbled himself to death on a cross and was exalted to the highest place. It's in Jesus' name we believe and pray. And everybody said, Amen.
Amen.
Amen, and happy Tuesday. Let me give you the numbers from around the world. I'm going to start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow's up a whopping 15 points. The Nasdaq's up 35. S&P 500 is up 3. The Russell 2000 up 3.5. Pretty quiet. In the commodity basket, crude oil up 47 cents, trading 68.83 last. Gold up $31.50, trading 27.1710 last. That's a gain of almost 1.25%, or $3,100 per contract traded. Silver up 6 cents, trading 32.68 last. In the Asian markets at the close, the Nikkei posted a gain of 207 points. The Shanghai rose 20. The Hang Seng fell 102. And in the European markets at the close, FTSE down 71, almost 1%. The DAX down 16. The CAC down 83, which is almost 1.25%. So we had a mixed day in Asia. It was a red day for the UK. And at the moment, it is a green Radio Tuesday here in the US of A. But again, we're not deep in the green, but all four of the indices are green nonetheless. We'll see if that holds till the end of the broadcast. On the news front, police have arrested a suspect in connection with the killing of the United Healthcare CEO Brian Thompson, who was shot outside of a Manhattan hotel last week. The suspect has been charged with 5 crimes in Pennsylvania, where he was found, including carrying a firearm without a license, forgery, and tampering with records. He's also been charged with murder in Manhattan. 26-year-old Luigi Mangione was identified at a McDonald's yesterday in Altoona, western Pennsylvania, roughly 280 miles from New York City, where the fatal shooting took place. Police say he was found carrying a so-called ghost gun. Now that's a firearm made using parts printed or purchased online that may be more difficult to trace or tie to past crimes. The silencer and other features were consistent with the murder weapon, according to authorities. The suspect was carrying multiple fake IDs and a handwritten 3-page manifesto, allegedly criticizing the healthcare industry for prioritizing profit over patient care. I'm guessing he lost a loved one because the insurance company wouldn't pay up. Researchers at Google reached a major milestone in the race to build practical quantum computers, revealing a device with an error rate that gets lower as the number of qubits increases. The company says the breakthrough could allow it to build a commercially viable quantum computer by the end of the decade. Quantum computers rely on individual qubits, which harness the power of quantum mechanics, but are highly susceptible to things like temperature fluctuations, potentially introducing errors. Google's Willow chip effectively spreads the quantum information across more than 100 qubits, making one single logical qubit. To demonstrate, researchers performed a benchmark calculation using Willow in about 5 minutes. In contrast, a supercomputer would take 714 trillion times longer than the age of the universe, which scientists say is 14 billion years old, to perform the same computation. Researchers will now work to scale up multiple logical qubits connected together. That's starting to get a little bit scary. In the markets, Lena Khan's time may be running out as boss of the Federal Trade Commission, but she's not going quietly. The FTC chairwoman recently signed off on a request to Microsoft that is hundreds of pages long and demands information connected with a long-running antitrust investigation of the tech giant, according to Bloomberg. The investigation is wide-ranging and touches everything from cloud computing to artificial intelligence. Microsoft is a dominant cloud provider and has invested nearly $14 billion in the AI startup OpenAI, which is the creator of ChatGPT. To the Fed. Focus is now back on the inflation front in markets this week. And the release of the November Consumer Price Index is expected to show price increases continue to make little progress toward the Federal Reserve's 2% goal. Wall Street economists expect headline inflation rose 2.7% annually in November, an increase from 2.6% in October. On a core basis, which strips out food and energy prices because we don't use those, CPI is expected to have risen 3.3% over last year in November. This would mark the fourth straight month of a 3.3% reading of core CPI. Zoom out to mid-2022 with CPI's 9% peak, and the significant progress is clear, as Fed Chair Jerome Powell has reminded us. But look closer at the past few months, and the Fed appears to have an issue many of us have experienced before. While some have likened the final fall in inflation to the struggles of the last mile in a race, ADP chief economist Neela Richardson told Yahoo Finance the Fed's current predicament is akin to a weight loss journey. The labor market is slowing, wage growth looks like it's plateauing, and the Fed is still trying to get inflation down. Richardson says, so I liken that to trying to lose the last 5 pounds. It's usually the hardest, and getting from 2.5 percentage points of inflation back to 2%, it's probably going to be the trickiest part of the whole thing. Well, millions of Americans who are behind on their student debt may face a financial shock next year. The federal government is expected to start collecting on defaulted loans for the first time since payments were paused during the pandemic. Though the Biden administration required borrowers to begin making their normal repayments in 2023, it is yet to resume efforts to recover money involuntarily from people with seriously past due balances. That process can involve garnishing wages, tax refunds, and Social Security benefits, along with formal legal proceedings. And they probably won't get a pardon. Gold rose for a third day today as traders shifted their focus to key U.S. inflation reports due this week that may shape expectations ahead of the Federal Reserve's final interest rate decision of the year, which will be on the 18th of this month. And last in news from Bloomberg, U.S. third quarter labor costs grew less than initially estimated after a downwardly revised decline in the prior 3 months, adding to evidence the job market is no longer a source of inflationary pressure. Well, there you go. That's the news. Let's bring it home. Logic 247, our 24/7, around-the-clock E-mini alert service. We're currently in week 332, and over the last 332 weeks, we have issued over 18,600 individual handcrafted alerts, and we've averaged on a weekly basis 20% or less of the alerts being stopped out based on market structure and a very simple process that we teach all of our passport holders in their one-on-one mentoring sessions. Now, since the markets opened this past Sunday night at 6 p.m. Eastern, we've issued a total of 22 alerts. That was through 6:30 a.m. Eastern this morning. There have been some additional alerts issued since then, so Valerie will reconcile the recap this afternoon, as she does. At the time she did the recap, we were still waiting on the outcome of 6. That gave us 16 actionable alerts, of which 2 or 13% would have been stopped out, again based on market structure. And that very simple process we teach all of our passport holders in their one-on-one mentoring sessions. Remember, the purpose of the alerts is to teach you how to read the chart. If you want to learn how to trade for a living, it's not going to happen until you learn to read the chart. You should be able to look at any chart of any market in any time frame, and with our humble set of indicators, know instinctively what the next high probability move is. And because we don't know what's going to happen next, nor does anyone, no matter how much they lie. You can expect to be off about, 20% of the time. Now, our original alert service, it's different. You see, the logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. If you're a member or trial member, be sure to read this information. It's very important that you understand it. If you don't understand it, ask. Now, where the logic alerts come out around the clock, the CTAs are published as a static report shortly after the Globex open each evening. Some evenings I get them out right at the open, as I did last night. So what's important for you to understand is every one of our members, every one of our trial members had every one of these targets right at the open last night. S&P 500, the Dow, the Russell, crude oil, NASDAQ, gold, silver, and bonds. So with that, we can go to the daily chart. Now, the daily chart is important, not because you trade it, but because the institutional traders look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Has everything to do with account size. The institutional traders have massive accounts in the hundreds of millions, billions, and in some cases even trillions of dollars. They trade in large size. That moves price. Whether you trade futures or stocks or crypto or Forex or even ETFs, if you'll spend 2 minutes with the daily chart before you begin the actual trading session of whatever you're going to trade, you're getting a free look over the shoulder of the deep pockets that move price. Now, as you can see from this little bitty candle, price does not move very much. Right here, you can see that the step line crossed blue and climbing. Michael, your mic's on. So the step line crossed, and as we talked about yesterday and the day before, what do we expect to happen? For price to retrace back to the BBC. We're sitting on support right now at the 62% fib extension. Now, when you're looking at a smaller time frame, you won't know that price is sitting on top of major support. Not only is it the 62% fib extension, but this doji right here is just below it, okay? So that's why price isn't falling out of bed just yet, but we certainly are off the high of the day, and we're also off the low of the day. Let me, hang on, let me mute Michael's microphone.
Sorry, I got it. I muted it.
Oh,
I muted
okay.
it.
All right, no
Sorry about
problem.
that. I'm trying to fix my problem here. And
Okay.
I didn't realize that one of them opened. Sorry.
That's all right, no problem. Okay. Where were we? Okay. So we're sitting on top of the 62. Okay. That green, that little body on that candle just went red. You can see the range on the day. Resistance is at the daily step line. Support at the 62% fib retracement. And now we've got support times 2 down here at the daily BBC and the 50% fib extension. The green line's called the BBC. It stands for bull bear cross. When price crosses below the green line, we're bearish and expect lower prices. When price crosses above the green line, we're bullish and expect higher prices. Now, price always reverts to the mean In our case, the mean is green. We call it the BBC. You can see the pullback held. And it held, 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 and it held 5 days in a row. But there will be times when price will trade through the BBC, as it did there, as it did there. This keeps the market fluid and tradable. Okay. Now, while we don't know what's going to happen next, we know there's an extremely high probability, because the step line is crossed blue and climbing, that price is going to drop to the 50% fib extension and the daily BBC. Will it hold as it did here 5 days in a row, or will it trade through? Well, notice here how red and falling drove it below the BBC. Will we have that same scenario here? We won't know until it happens. So, again, take 2 minutes, look at the daily chart of whatever you're about to trade, not only to see what the deep pockets are up to, which is not much today, but you're able to identify the big picture resistance and the big picture support. Like the one we're sitting on right now. In fact, that's where we closed yesterday. And we've not traded below it, but it looks like we might be getting ready to. So I would definitely be looking on smaller time frames for trades on the short side. Now, the 30-minute chart is where all alerts are created, both the Logic 247 and the Concierge trade alerts. And because we've had such a flat session, we've touched neither the long target nor the short target. The vertical line separates today, Tuesday, from Monday. Back here is Friday. Now, these are this week's weekly trading zones. Yesterday you were looking at last week's zones, because the alerts that go out on Sunday night are based on the previous week's zones. The new zones come out Monday morning, 6:15 a.m. Eastern, since December 14th of 2009, almost 15 years. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. Now, when price encounters a zone, 70% of the time you're going to get this, consolidation. 20% of the time you'll get this, rejection. And 10% of the time you'll get the slice. That's when price slices through a weekly zone like it's not even there. Then it runs out of steam and retraces back to the zone it sliced through and continues in the direction of the slice. That repeats itself over and over and over again. Now, when red and falling turned to blue and climbing, we popped up above the BBC. Plenty of room to get you going for the day, but we ran into resistance based off this right here. Now, resistance sends the market looking for support. Support sends us looking for resistance, back to support, back to resistance, back to support. Over and over, again and again, a never-ending cycle. Now we said on the 30-minute, on the daily chart, that it looked like the ES was getting ready to trade lower. Okay, look what's happening on the 30-minute. Now this BBC, the green line, just as the markets are fractal in nature, so's the BBC. You can put it on a daily chart, a weekly chart, a monthly chart, a 30-minute chart, a 5-minute chart, a tick chart, a range chart. And the results it's going to give you are the same, relative to whatever time frame you're looking at. In other words, don't expect daily results from a 1-minute chart or vice versa. It's always relative to whatever time frame you apply it to. And price always reverts to the mean. And the pullback, this would be a pull up, it held, right? This is a pull down, and it held. But eventually we know it'll trade through, as it did right here. Now when it hit the zone, we expect that to be support, and it was. It bounced us back up to the BBC. We spiked up to red and falling. Now, right here, we need to take out this low. 60.57.5. But I like to be very conservative, so let's make it 60.55 down to 60.49. That would be 6 points. You only need 2 points to get your goal for the day. On the Dow, we opened right at the weekly zone. Yesterday, you can see the high was a zone and the low was a zone. And the final low at the close of the session yesterday, we were right at a zone. So when the market opened, we were trapped with resistance overhead and support below. And so it pinched up, pinched up, pinched up, and then it looked like we were going to drop. Now notice this low lines right up with this low. That's market structure. Support sends us to resistance times 2. So we get a leg, a retracement, and a leg where we hit the short target and trade through it. Support sends us looking for resistance. Now, this candle sliced through the zone like it wasn't even there. But when it ran out of steam, it retraced to the zone it sliced through and continued in the direction of the slice. See how that works? Now, price has gotten below the BBC. Blue and climbing is directly above price. So it looks like what's about to happen is blue and climbing is going to roll over and become red and falling. And we're going to have price drop initially to this spot, this spot, this spot. We trade every market exactly the same. NQ opened just above a weekly zone, but it too was trapped. Support below, resistance above. We did come down and touch the short target. Support will send the market looking for resistance. We got through the BBC. We got a nice leg, and then a retracement, and then a leg right up to the zone. Now, we spiked it by a couple ticks, but that sent price right back down to the short target. And it looks like we're heading back to it again. If you were to sell 21,456 to 446, the target, that would be $200 per contract traded. Crude oil. Here's where we opened, pulled up to the BBC, resistance, pull back holes more often than not. Sends us down to the zone, which we expect to be support till proven otherwise. We get a leg, and a retracement. We get back above the BBC, and then we have that perfect stack. Price, step line, blue and climbing, BBC. And we run all the way to the long target, through it, and then we consolidated for hours at the zone. Now the step line, that's the black line, it's crossing blue and climbing, so price is probably going to retrace right now back to the BBC. Then the question becomes, will it hold or not? Let's say it doesn't hold. You got a bullish cross right here. That's when the blue line gets above the green line. When you have a bullish cross that leads to an extended move, the first time price revisits that area will almost always be good support. So you've only got a little bit of room to work with there before you run into 68.20. Consider that support. Okay. Gold. We opened right at the zone. And once red and falling turned to blue and climbing, we just kind of went leg, retracement, leg, and we're at the zone. We almost hit the zone here. Missed it by 6 ticks. So we had a leg and a retracement and a leg. That's how price moves. Rarely does price move in a straight line. Leg, retracement, leg, retracement, leg, retracement. And remember, the pullback holds more often than not. Now, right here, we had a bullish cross. Okay? And that's where this support came from, right here. Which sent us back up looking for resistance. And that is the highest weekly zone right there for gold this week. 2739/2740. Considering today's only Tuesday, I suspect we just might make it. Now the step line has crossed, but price has continued higher. So one or two things is going to happen. Price is either going to retrace back to the BBC or the step line. Like if buyers suddenly really bid this thing up, then that step line will cross back over to the left side of blue and climbing. And because we never got below this zone, there was never any reason to focus on the short target. Okay. Silver. Here's where we opened last night. Had a huge day yesterday. I think it's pretty close to $7,500 per contract. We open here above the BBC. Now remember, on this candle, all trial members had those CTA targets. Okay. This candle opened at 32.45 and ran up to 32.55. That's 10 pennies. 2 pennies is $100. That one 30-minute candle right there is worth $500 per contract traded. So we got a leg, a retracement, a leg, and a retracement, a leg, a retracement, a leg, and then we get the deeper retracement. Okay. Now this low right here, we spiked it just a little bit. Support sent us to resistance, which sent us back to support. And then we get above the BBC, we get a retracement, the pullback holds, and that sends us so close to the target. 32.79 half, and the target's 32.80. So that resistance sent us back to the BBC, the pullback held, and now we're attempting to hit that target again. Okay. It brings us back to the daily chart where we're just still sitting on that 62% fib extension. You want to be a part of this. Enough games, enough gimmicks, enough parlor tricks. It's time to learn how to trade. All you got to do is send an email to support@cfrn.net. In the subject line, simply put, I want to become a member. In the body of the email, put your name, your phone number. We're not going to call you. We're going to send you an email filled with information. Also in that email, read the information so you can make a well-informed and intelligent decision. And then there's a link you can click to actually become a passport holder. Once you do that, you're going to get a couple more emails. File them away because you're going to need them. There'll be information in there that you don't even understand at this point. But trust me, you'll need that info. So hang on to those emails. When you're a passport holder, you get 2 hours of live training every trading day in an interactive environment. Real trades and real markets with real money. While you trade along, learn the strategy, and ask lots of questions. Along with the 2 hours of group training every day, you also get private one-on-one mentoring at no extra charge. The strategy you learn, the indicators you own as a passport holder, are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETF, doesn't matter. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, as I just showed you, over and over, again and again. It's a never-ending cycle. As a passport holder, you'll get the Logic 247 alerts around the clock. You get the concierge trade alerts the second they're published each evening. Every Monday morning at 6:15 a.m. Eastern, you'll get the weekly trading zones. And once they're published, they're carved in stone for the entire week. They do not change. You'll be able to attend the members-only workshop every Thursday night. And you're going to get the golden keys that open all the private channels in Telegram. One of those channels has hundreds of members-only workshops. Do you need to watch them all? No. But it's nice to know you have all those teachable moments at your fingertips. It's everything a trader needs, all under one roof. One low price and around-the-clock support. Just send that email to support@cfrn.net. All right, good word for the day. Yesterday, we posed the question, should I or shouldn't I? Today's topic, follow God and take your children with you. Genesis 13:12. Lot moved his tents to a place near Sodom. Jesus said in Matthew 18:6, if anyone causes one of these little ones, those who believe in me, to stumble, it would be better for them to have a large millstone hung around their neck and to be drowned in the depths of the sea. Implicit in those words is a sobering challenge to every parent and every person who is a role model for children. Your moral authority doesn't come from your knowledge, but from your lifestyle and integrity. As your children grow up, they're less apt to listen to what you say and more inclined to imitate what you do. So where are your footsteps leading them? Remember Abraham and Lot? They shared the same family, the same faith, and had the same opportunities in life. But when it came to raising children, Abraham grew roses and Lot grew weeds. What made the difference? Abraham followed God, while Lot followed his selfish interests. Lot moved his tents to a place near Sodom. Before it was over, Lot lost his moral authority with his family. So here is the question. As a parent or a role model, Where are you pitching your tent? King David also lost his moral authority with his family. Even though God forgave his affair with Bathsheba and permitted him to remain on the throne, his sin took a terrible toll. His son Amnon raped his sister Tamar. His other son, Absalom, stole the throne, and his son Solomon's wives ultimately led him into idolatry. Nathan the prophet told him in 2 Samuel 12:11, "Out of your own household I am going to bring calamity to you." You only get one chance to do it right. So follow God. Take your children with you. That's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.